following program contains mature themes on a thematic subject. Viewer discretion is strictly advised. State of the Nation is an opinion-based program. The thoughts and opinions shared within this program are not intended to offend or disregard anyone's perspectives or beliefs. We aim to foster open dialogue, encourage critical thinking, and explore thought-provoking subjects. Recognizing the importance of diversity and inclusion, this program welcomes all viewpoints and cherishes the right to express them freely. This program also contains the opinions of the participants and does not reflect the views and beliefs of the Derana Media Network. The network believes in a safe space for all ideas to be expressed and on its duty to create such a platform for free speech. Viewer discretion is strictly advised.
Good evening. Tonight, you and I have to follow one big question. Whose numbers are we living in? The World Bank and the IMF says growth cools. The central bank, however, says we stay strong. And both admit the cyclone wasn't fully priced in. Then comes the $166 million IFC package through banks. Real help or money that will never reach the SMEs breathing on an inhaler? Or will it actually aid the ailing industry? Bottom line, is this a real recovery with real reforms or a forecast war dressed up as an economic miracle? For insights, analysis and opinions, tonight I'll speak to the Deputy Minister of Finance, Dr. Anil Jayantha Fernando, Regional Director for Asia in the International Development Economic Associates, Dr. Farwa Sial, Country Manager for the World Bank Group, Sri Lanka and Maldives, Gevorg Sargsyan, Global Business Cycle Analyst, Dr. Kenneth de Zilwa, Consultant of Old Age Psychiatrist, Dr. Madhushani, and Deputy Head of Academic Affairs at the BALPP, Dr. Anuradha Rodrigo. Good evening, I'm Mahieash Johnney, and this is the State of the Nation. Once again, a warm welcome to this week's State of the Nation. We have a packed rundown, mainly focusing on Sri Lanka's economy. I'm going to throw some numbers at you and try to get you to understand as to what might be really going on. At times, what we are told doesn't make sense. But first, Sri Lanka needs a strong opposition, especially when we have a mammoth government. Because when one side has overwhelming power, the risk is simple. They start governing like they can't be questioned. And when many MPs are in Parliament for the first time, mistakes don't come as a surprise, they come as a guarantee. So what's the opposition's job? To shout, to trend, to create noise? Absolutely not. A strong opposition must be the voice of reason, the guiding compass, the group that says, here's what you missed. Here's what will backfire. Here's the corruption risk. And here's a smarter way to do it without making the public pay the bill. Not because they love the government, but because they love the country. Opposition is not a circus act. It's an oversight. It's scrutiny. It's asking the boring questions about contracts, appointments, tender boards, audits, the stuff that doesn't go viral, but decides whether you and I get cheated or not. And the opposition must do something else we rarely see here in Sri Lanka: build credibility. That means when the government does something right, say it. When they do something wrong, prove it. Bring facts, bring alternatives, and force the debate to move from slogans to solutions. Because if you oppose everything, people stop listening. Then you're not just the opposition, you're the background noise. Sri Lanka doesn't need more noise. We need a strong opposition that can correct without sabotaging, challenge without clowning, and keep the government focused on delivery. Because a mammoth government without a strong opposition is like a lorry with no brakes. When it crashes on you and me. We'll be right back. Welcome back everyone to the State of the Nation. Now, in our lead story tonight, Sri Lanka's economy. Honestly, where are we heading? Tonight, you and I are looking at a gap in the story, and it's big enough to change how people's plan businesses, how investors price risk, and how any government sell an economic narrative. On one side, the World Bank, in its Global Economic Prospects of January 2026 update for South Asia, it puts Sri Lanka's growth at 4.6% in 2025 and then say we cool down to 3.5% in 2026 and 3.1% in 2027. And the World Bank isn't blaming astrology or bad luck. It points the structural issue, factor and product market inefficiencies scarring from Ditwa and global uncertainty that hits demands for exports. But demands were really good last year as we had record export figures. Now, after concluding its visit to Sri Lanka, the IMF delegation who were here to assess the impact of Ditwa to the economy said this about the growth. Now, initially we thought they were here to assess the EFF's fifth review, but apparently they were here to assess the impact Ditwa had on Sri Lanka's economy. Watch.
What informs our assessment, that will come down obviously to incorporating the recent economic developments, obviously the cyclone, the effect of the cyclone, and the subsequent support that was given by the government, updating our macroeconomic projections for the foreseeable future, and then as needed, adjusting any sort of program parameters and conditionality. So within that, obviously, understanding the effect of the cyclone is very important, given its breadth and given the associated effect it can have across the economy. We haven't had an opportunity to make a determination yet. Much like everyone else, we're trying to understand the new data as they comes in.
Now listen to what we hear from our own authorities. The central bank's own messaging says the economy grew 5% in the first 9 months of 2025, and it projects the economy to grow around 4 to 5% in 2026. Watch.
Growth, our projection is not 3.1%, 4 to 5%. Who said 3.5%? We see economy is growing between 4 to 5% this year as well.
Well, that was the central bank governor speaking at a press conference last week. And here's where it gets interesting. Both sides are basically admitting a cyclone-sized complication. The World Bank clearly says that the impact of Cyclone Ditwa last year were not yet incorporated because the damages assessment was still ongoing. So they finished it, they went back, they'll calculate, and they will tell exactly this is the impact from Ditwa to Sri Lanka's economy. The central bank also says its projections were made prior to the cyclone and that the impact and policy response will be incorporated in upcoming forecasts. So now you and I have two narratives sitting on the table. One says baseline slowdown is structural and export demand is shaky, and the other says yes, there was devastation, but the economy has buffers and rebuilding can keep momentum going. So what's the truth? Is it simply a forecasting difference? Is it a time horizon issue? Short-term rebuilding bounds versus medium-term potential? Or are we watching two institutions tell two versions of the same economy? One from the outside, one from the inside. Let's hear from the government itself. First, joining me now is the Deputy Minister of Finance, Dr. Anil Jayantha Fernando. Appreciate, Minister, for you coming on the show. It's really hard to catch you, so I really appreciate you taking the time. Now, explain to us, Minister, how does the World Bank and the IMF forecast a lower growth and the central bank a higher growth? Very confusing. How did they get those figures of 4 or 5%? And out of this, which set of numbers is the government using as the official baseline for planning, budgeting and communicating with investors?
Yes, Mahieash, it's my great pleasure answering to your questions. So basically you raised a question about the growth forecasts. In fact, forecasts are done by different agencies, so it's very like the freedom is there for anybody to make forecasts based on their own assumptions and the information that they have, the sources of information that they get. So likewise, even the models, the forecast models. So therefore, it is not confusing because as the government, we are responsible about our forecasts. So basically, government forecasts based on the statistics and the performance that we have during 2025 and the information gathered from the Department of Census and Statistics, then the main responsibility is with the fiscal department. Fiscal department has a separate unit or the division to do this forecasting. So that particular forecast will be adjusted if needed in case the new information will come in when the economy progresses. As of now, the medium term growth as that was explained in the budget speech by His Excellency Anil Kumara Disanayake, we target an inclusive and sustainable growth of more than 7%. That target has not changed. As of now, we are moving on the same trajectory to achieve this particular target in the medium term. And as far as the data like baseline, what we take is the last year's performance and the forecast for future investments and the forecast for the public investment, that is what we call capital expenditure. These are the basic things. As of now, we happen to face a new situation as well. All in all, we can say that there are no significant threats or constraints that our growth forecast would be hindered.
Minister, the World Bank also notes cyclone impacts were not fully priced into those projections yet. So what is the government's latest estimates of cyclone's economic hit? I know you all earlier said that there is no major impact. And when will you publish an updated macro framework so businesses and investors can plan with real numbers and not just go by with feelings?
Yes, Mahieash, there are two things related to this particular question. One is the impact of the cyclone Ditwa. It is a big damage, of course, but when there is a damage or a disaster, always that runs to a negative connotation that everything would be hampered, economy would be negatively affected, we will not be able to achieve the growth, that and this. But it is not the case in this particular situation. So it would be that if this disaster had really destructed entire economic mechanism and the macroeconomic variables and all those things. So it is not the situation. This is totally unexpected situation, and damage is there, of course. Even the damage has been now estimated with the best available information with the help of World Bank and some other agencies, that roughly amounts to $4.1 billion. This may vary for sure, but our challenge, our task is to quickly and promptly attempt the issues in hand. As of now, how best we rebuild Sri Lanka. In pursuing this thing, how best we could bring the livelihood to the people, those who lost their houses and lives and damaged their businesses, and likewise there are many areas. So what did the government do? Government came out with a special supplementary budget of 500 billion rupees in addition to the planned budget for 2026. So that means the growth expectation which are based on the budget 2026 is not hampered, that is there. So that means we slowly move towards our medium term growth. In addition, this 500 billion is a cash injection into the economy. New economic activities will arise. As a result, this the impact, it is a fact that there is a loss, but the way we deal with this the disaster really stimulates the economy, and that would further enhance the economic growth, and it does not distract the economic growth. So therefore we positively look at and intervene in this thing. Our challenge is how best the allocated money is spent for rebuilding the livelihood of the people, and the restructuring and reconstructing infrastructure that we lost, roads, railways, irrigations, schools, hospitals, all those things we need to expedite. We need to build their capacities and all. So this is our challenge. We are working hard with the support of the bureaucrats and the support given by the development agencies and support given by the other countries. So therefore we will turn this disaster situation to an opportunity for us to continue with the same economic trajectory of reaching our targets.
Absolutely. Now, Minister, beyond the rebound story, tell us like 3 structural reforms you will deal with this year that will actually raise Sri Lanka's long-term growth potential, not just growth on paper.
Yes, growth on paper means really growth that has substantially happened. But I admit and agree with you, it would be really meaningful. The growth on paper means the growth achieved by the country as a whole. The benefits of the growth should really be transferred to the general public in many ways. So what are we supposed to do in pursuit of achieving these targets? It is none other than promoting investments, bringing more and more investment and expand our trade. So what have we done? So structural changes. So basically we want to structurally create a conducive environment with a level playing field. How do we do this thing? Structurally we bring the technological platforms into all the areas where the investors interact. That is why we have a separate ministry, digital economy, that has launched and taken lots of measures to establish these things. So we are on target, and we are hopeful that we will be able to create that digital infrastructure facilities and the conducive environment, whereby investor protection is also another area. New act will be presented to the parliament within the first quarter of 2026, where the investors will increase their confidence of bringing investments. And in addition, we want to do structural changes in the production processes by bringing or taking measures to bring the cost of production down. And at the same time, the workforce, labor force, there are issues, structural issues in our labor force. The women labor force participation is insignificant as of now. We have lots of programs and the strategies to empower women and empower people, especially the rural, the people, to connect them into the economic activities with and as skillful employees, more competent employees. So that is coupled with the parallelly implemented educational the reforms as well. Those are the key the changes, structural changes in our strategies.
All right, let's leave it at that. That was Deputy Minister of Finance, Dr. Anil Jayantha. Fernando, thank you very much. Let's now bring in a global perspective to this story. Joining me now is Regional Director for Asia at the International Development Economics Associates, Dr. Farwa Sial. Thank you so much, Doctor, for taking the time. Doctor, now last week the IMF team was here in Sri Lanka analyzing our events regarding the damages to the economy from Cyclone Ditwa. Now, confusing numbers are being thrown at by the IMF and the World Bank. They both say that growth will be limited to 3.5% and 3.1% in this year and next. But our own central bank, the Central Bank of Sri Lanka, is confident to say that that ain't the case. That is not right. We will grow by 4 to 5%. Now, whose projections does seem more plausible to you, in your opinion?
Yeah, thanks a lot for having me, Mahieash. So, determining the accuracy of statistical projection, especially growth figures, is a difficult exercise because the methodological parameters are used by different organizations can vary, even when they are harmonized in theory. But as we know, empirical evaluations are not neutral and fraught with political interests at all levels. So we should start the scrutiny of the IMF here because it has assumed the job of growth projections for all countries. And if we follow the history of IMF evaluations, there is a record of inaccuracy and discrepancy. First, it's very important to remember that the IMF's record in predicting growth rates is also linked to its failure to predict crisis. So the 1997 Asian financial crisis was a case point. IMF's 1996 Article 4 report on Thailand highlighted the current account deficit at the time, financial fragility, and the baht pressure, but still described the economy as fundamentally sound. And in 1993, 4 years ago, before the crisis, the IMF's compatriot organization, the World Bank, in fact, published the infamous report, the East Asian Miracle, which is now considered a landmark report because it was such a celebratory one. It praised the liberalization, the political leadership, overestimating the short-term foreign capital inflows and fixed exchange rates. So both IMF and the World Bank were not able to decipher the imminence of crisis, let alone predict the country's continuity of growth rates. And after a failure of these predictions, the common narrative was that both the IMF and the World Bank have reformed their methodology. But we see that in the context of the 2008 financial crisis, the story was very similar. IMF's reports warned about global imbalances, but did not predict the chronic nature of the crisis and the global contagion which came with it. And this is evident in the IMF's 2007 forecast in the Global Financial Financial Stability Report. Now, if we consider IMF growth projections in its loan packages, there is documented evidence that growth rate projections are linked to IMF's long-term strategy in the recipient country. That is, prediction of both higher and lower growth rates are contingent on the rolling out of the next tranche of money, exhibiting a bias in favor of IMF interests and that of its dominant shareholders. And of course, we have to remember other supply-side factors, such as the fund's own objectives in receiving its basic rate of charge, SDR interest, surcharges, plus service charges. So, this is what makes the debt and the loan so expensive anyway. If we consider Sri Lanka's growth rates, there is no doubt that the odds are against it. It has been through a devastating experience even after the default, and unfortunately remains at the brink of the climate crisis, which will remain a consistent reality as in most global South countries. However, the discrepancy of figures between the IMF and the Sri Lankan Central Bank demands more scrutiny on the IMF side, in my opinion. This is not to say that states do not act in self-interest, but to evaluate the record of an institution which has a global history of an imperial agenda. So the discrepancy is 2%, which seems insignificant, but potentially leads to long-term implications in maintaining an austerity regime, continuing surveillance, monitoring of government policy, and so on. And finally, I need to add this, that the most important thing here is also to consider that growth projections are often considered and analyzed in alignment with the so-called now discarded theory of the trickle-down effect. That is, growth is a sign of more or less prosperity, better livelihoods, and so on. In fact, it is the converse with IMF programs. Whether it's South Korea, which successfully managed to repay its loan in the shortest period of time, or Pakistan, which is a serial recipient of IMF loans, in every instance, the fact is that IMF-driven growth projections are a sign of economic hardship, and integration into the financial architecture has resulted in strangling of livelihood of the poorest. And then I need to end this with the fact that growth projections, especially higher ones, are not a guarantee for debt repayment or a debt exit. Growth perpetuates further accumulation, especially if we see the model that is followed by most countries now in terms of entry of private capital. And therefore, if the goal is a sovereign exit from debt, there has to be an overhaul of the entire paradigm of development. I'll stop here.
All right, let's leave it at that. That was Dr. Farwa, the Regional Director for Asia in the International Development Economics Associates. Thank you very much, appreciate it. A quick break now, back with more State of the Nation. Welcome back, everyone, to the State of the Nation. Now, this is going to be very technical, but it decides whether the private sector actually breathes or just survives on inhalers. Now, this week, the IFC, which is part of World Bank Group, announced a $166 million financing package for Sri Lanka, routed through 3 private banks: Nations Trust Bank, Commercial Bank of Ceylon, and National Development Bank. The structure is also important. A $50 million loan up to $80 million in risk-sharing facilities, where IFC shares part of the losses on eligible SME loans, and $36 million in trade finance support to help trade and supply chain activity to move. The stated target groups are SMEs, especially women-owned businesses and agribusinesses, plus some technical support to modernize digital transaction banking and build climate risk management. Now, here's where you deserve a straight answer. Like we said before, the World Bank's own growth numbers on Sri Lanka says that we will be slower in the next 2 years. So if the forecast says that we slowed down, why are they investing? Like, do you expect us to speed up? Joining me now is Gevorg, the country manager for the World Bank Group here in Sri Lanka and also for the Maldives. Mr. Sargsyan, thank you very much for taking the time to speak to us. Now, your own World Bank outlooks signals slower growth this year, yet the World Bank, along with the IFC, is putting $166 million into our private sector through banks. Is this investment meant to fight that slowdowns or soften it, or simply make sure the economy does not slip backwards? And that exact outcome would make you say, yes, this money worked.
Thank you, Mahieash. Thanks for this question. Well, first and foremost, this package is an indication of our confidence in the direction of the economy. We have seen that the central bank has upgraded forecast also for the 2026. After 2 very successful years of the recovery, we'll be reviewing our own numbers in the coming months. Now, World Bank Group is counter-cyclical institution. So we come in and we increase our financing and support when other private investors or lenders are not active. And this is also a way to signal to the market that sense of confidence. So that's how we perceive this. Now, in terms of how success looks like and how do we measure it, right? So I would probably mention three things. One is seeing material, credible increase in credit going to the institutions and entities we are targeting, especially SMEs in agribusiness and women-led businesses. The second one will be what I already referred to is the market confidence. Seeing more investors, local or international, putting their money and expressing interest in investing in Sri Lanka, that will be a very important indication. And then ultimately the beneficiaries of this program, the various SME businesses, agri-business, SMEs, women-led businesses, seeing their resilience in terms of higher than average growth, but also ability to withstand any shocks, like recently, unfortunately, we had a cyclone. Ability to withstand and show better than average performance will be another probably way of measuring this.
So let's talk about what this actually means for an ordinary business owner. This package goes through banks with a loan, risk sharing, and trade finance guarantees. Now, how do we know this won't just strengthen bank balance sheets while SMEs still struggle with high cost for credit? Now, what conditions or incentives are attached to make sure that the money genuinely reaches SMEs, especially women-owned and agribusinesses, according to your target groups?
Very, very fair question, Mahieash. This is not, IFC is not just, signing a check to banks just for corporate lending and then letting them do whatever they want. This is highly structured finance specifically to provide financing, unlock financing to the subsectors and SMEs that I already mentioned about. To give you an example, Nations Trust Bank, for example, out of the $50 million funding, at least 15% will have to go to women-led businesses. Or if we talk about the financing or de-risking instruments that we have provided to both Commercial Bank of Ceylon and also NDB, there our de-risking instruments will allow these banks to lend to SMEs which otherwise might not have been receiving any money, or will allow them to reduce cost of lending or not to ask for collateral, right? So this is basically very much lowering the cost, but also expanding the pool. Now, keep in mind that many SMEs are operating in formal or informal economy, and hence they are accessing financing not from financial institutions, but from other forms of lending that are often very high cost and high requirement for collateral. So even attempt to bring them into more formal sector, to the banking sector, and get better structured, more transparent, financing is critical part of what we'll be doing. So in addition, we are also complementing our financing with advisory work. We'll be working with the banks to improve their risk assessment of SME businesses, their supply chain financing, and hence helping to integrate some of this SME in a global supply chain into export-led supply chain of Sri Lanka.
Absolutely. Thank you very much. It's very clear indeed. Let's leave it at that. That was Mr. Gevorg, Sargsyan, Country Manager for the World Bank Group for Sri Lanka and Maldives. Thank you so much. This is the State of the Nation. Back in a moment. Welcome back, everyone, to the State of the Nation. Now, have you seen this on socials, this viral video?
I have a theme song for Dr. Pepper, and it goes like this. Dr. Pepper, baby, is good and nice. Doo-doo-doo.
Now, that was TikTok creator Romeo Bingham, who sang a tiny jingle for Dr. Pepper, posted it online, and it exploded past 50 million views. And Dr. Pepper did what big brands do when the internet hands them gold. They didn't argue with it. They turned it into an official TV commercial. Not bad for 11 seconds. I was just messing around, isn't it? Now, why am I telling you all this on State of the Nation? Because this is how money is made now. Attention first, branding second, profits last. And then it happened again. Soon after that success, she did content for a company called Vita Coco, a US company that sells coconut water. Now that got my attention. After all, coconut is our thing, right?
This is my theme song for Vita Coco. Vita Coco, you'll go loco, cause it's so dang delicioso. Boom, boom.
Now, Vita Coco, the brand, took something that we treat like ordinary, put it in a nice box, slapped a global story, and built a company doing about $500 million a year in sales and growing. Right now, its market cap is around $3.2 billion, and in 5 years, it's supposed to grow to over $8 billion. Just one company that sells coconut water. So what are they really doing? They're taking coconut water, not the milk, not Kiriyodi, just coconut water, packaging it properly, marketing it properly, and selling it to people who will pay premium prices because it looks premium. And where are they getting these coconuts from? They get it from places like Brazil and the Philippines. And yes, even a small amount from Sri Lanka too. And that's where my beef comes in. Because Sri Lanka had a record export year in 2025, about $17.25 billion in total exports, merchandise plus services. That's good news, real money. We really need it. But we still have the bad habit. We send out raw and semi-processed stuff, then someone else does the branding, the marketing, the global distribution, and then they take the real premium price. Along with that, the credit. So let me ask you plainly, why can't we build a global coconut brand of our own? I mean, there are other brands that have been created just like this for tea, for textile. Why not for coconut? We've tried, I know that. But why can't we crack the code? I mean, come on, it's coconuts. That's our thing, right? We go coconuts for all the wrong reasons, but we are not going coconuts for coconuts' sake. That's coconuts. Let's bring in Global Business Cycle Analyst, Dr. Kenneth Zilwa. Thank you so much, Doctor, for taking the time to speak to me on your holiday, I believe. Doctor, we keep exporting the usual suspects, textile, tea, rubber, coconut, gems. Everyone agrees Sri Lankan products are really good. But we are not capturing the value the way we should, because the middleman captures the premium rate. And what's the real disconnect here, and how can we actually fix it?
Yeah, no, you're absolutely right, Mahieash. And firstly, thank you for having me on the program again. Very interesting question, and you're absolutely right. As I said, this is a huge problem for Sri Lanka. We still tend to export a significant amount of unvalue-added products in terms of our total export basket. That's a huge question that we have been asking for some time, and that question has a very simple answer. The simple answer is industrialization. You need to have industries with sufficient strong balance sheets to reinvest in their own businesses and have technology to drive these processes and products. If you look at the products that we export, the export content in terms of our packaging, the way we present it, is still falling short of international standards, and hence the reason we import so much of consumer goods, and that's why we find the skewness in our trade balance. If you look at our, we talk in a lot about exports, but if you look at our overall merchandise trade balance, it continues to widen, and one of the biggest reason for that widening is that the Sri Lankan products, even though they have significant appeal and quality and richness in flavor, don't have that value addition component built into it. That comes by really investing in technology, supporting capital formation, giving these companies the space to grow, to find new markets, to incorporate new designs, flavors. So all this is part of this whole export drive that we have been looking at. And that can't come by having your hands tied back by way of having a stringent fiscal policy and monetary policy. You can see a classic example is China. In 30 years, China has taken over the entire manufacturing space of the global value chain. Now, people might say that China is a larger economy, but then what about Netherlands? If you look at Netherlands, you have a similar glaring example there, similar in size of Sri Lanka in terms of population, but the second largest exporter of fruits and vegetables to Europe and to the world. So, something is wrong, and I think that disconnect is primarily driven by the lack of reinvestment capital and lack of incentiving local entrepreneurs to capitalize their earnings and to support capital formation is one of the biggest drawbacks that I see, and I've been talking about this quite openly, as you know.
Indeed, I hope we can actually get it, across to our authorities and do something very different in this changing world. All right, let's leave it at that. That was Global Business Cycle Analyst, Dr. Kenneth. Thank you very much. A quick break. This is the State of the Nation. Back in a moment. Welcome back, everyone, to the State of the Nation. Now, tonight, let's talk about the state of our mind. The topic we treat like a secret until it becomes an emergency mental health crisis. Because, look, we can build highways, we can open hotels, we can talk about development all day. But if our homes are quietly falling apart, what exactly are we even developing? We're hearing that close to 30% of Sri Lankan adults are dealing with mental health issues. And a big portion is our elders, 60 plus category, the people we claim to respect, but are often emotionally parked in a corner. And on the other hand, we're also hearing warnings about youth crime rising in the 16 to 22 age group. And society's favorite habit kicks in then. Label them, shame them, call them senseless, and feel proud that we told the truth. Honestly, what can we do about this? The people who did everything to build this country feels isolated, and the younger generation is growing up to be somewhat of criminals. Doesn't anyone care about that? Well, joining me now is consultant old age psychiatrist, Dr. Madhushani Dias. Thank you so much, Doctor, for taking the time to talk to me. In today's society, if someone is in the older generation goes silent, we tend to say, oh, that's old age. But when it comes to memory loss, mood changes, isolation, what's normal aging and what's a real mental health red flag? What are the top 3 signs families should never ignore?
Thank you, Mahieash, for choosing this topic for discussion today. So, and it's a very appropriate question to start the discussion with. In fact, we see a lot of people still in our society tend to mix up the features of mental health problems or mental illnesses in older adults with that of normal aging. So it's very important that we are aware of the symptoms and the red flags of mental health problems in our older adults. So I'll just briefly tell you a few red flag signs that you need to think about. First of all, any changes in the mood, that is the emotional status, the emotions of our older adult. So they may be feeling very anxious, restless, nervous, or they may be feeling very low, depressed, or sometimes they can feel a bit, angry and irritable. So those mood symptoms are very important to pick up. And the second group of symptoms I want to tell you is the behavioral changes. So if you see any change in their behavior that is not the normal pattern of their usual behavior or personality, that might be a red flag. For instance, the older adult may be getting more angry with other people, agitated, or they may be suspecting other people of trying to harm them or anything like that. They may see or hear things that other people can't hear or see, or sometimes they can even become withdrawn and aloof. So this is the second type of symptoms I want to tell you. And the third category is the cognitive symptoms. Cognitive functions mean our ability to remember, learn things, our ability to use our language appropriately, decision making, organizing, planning, and things like that. So if you see any changes in this behavior, in these cognitive symptoms, again, that might be a red flag, that might be a feature of an underlying dementing illness or another mental illness. So if you think that there is a marked change in the person's mood, behavior, or cognitive functions, you can't ignore it. And also, if you think that these symptoms are really distressing to the person experiencing them or to the other people, and also if these symptoms are impacting on their daily lives, that they can't do their activities independently due to these symptoms, it's most likely that these symptoms are due to an underlying illness process.
Yeah, doctor, now recent data showed that the World Health Organization now treats loneliness and social isolation as a public health issue. Now in Sri Lanka, with so many children overseas, what does loneliness do to the mind and the body of an elderly parent or even a normal person? And what kind of a contact genuinely helps?
It's a very timely topic, Mahieash. Actually, not only in our country, internationally, these concepts, loneliness and social isolation, are becoming a huge problem. So if I may clarify it a little further, loneliness means what you feel inside you. So you may be in the middle of 100 people, but still you might feel lonely. Social isolation is the social component where you are cut down from your social connections. So both of these can have detrimental effects on your health. That's why they are named as a public health problem. So if we look at the situation in Sri Lanka, not only due to migration, but due to the changes that has been happening in the societal structure and economy of the country over the past few decades, people, especially the older population, tend to become isolated from the society and feel lonely. In fact, there are, research have been done. So it looks like about 20% of all the people are feeling lonely. The effects the loneliness and social isolation can have on one's health is huge. In fact, it can lead to mental health problems such as depression, anxiety, and even cognitive impairment and dementia. And physical health-wise, they can have bad effects on their physical health. They can aggravate heart problems, diabetes, blood pressure, and all kind of physical health issues. And also, it accelerates aging, and it will bring your death more closer to you. So I think it's high time that we talk about loneliness, make the public aware of this concept, and devise some strategies to overcome this problem. So there are things we can do at individual levels, and there are things we need to do at a societal level or a government level. So individual level, we advise our older adults to use technology. If you can't connect with your children who are overseas, so you can easily make a video call daily and connect with your loved ones. And also you need to make new connections. So you may join an elders club or any other suitable club in your surrounding and make new friendships and new connections. And also you need to refresh your old connections, maybe with your childhood friends, your cousins, and so on. And also you can take up some voluntary work, such as maybe teaching small children or something like that, so that you can stay socially active. At the government level also, we need to provide services for older people to be more socialized, like day centers and other opportunities, and we should give them opportunity to link up with younger population.
Yeah, doctor, that's very eye-opening indeed. Now, in most instances, many who are watching right now don't know the correct pathway. If you suspect depression, anxiety, or early cognitive decline in a parent, what's step one in Sri Lanka? Who should you see first? What should you ask, and when is it urgent?
Yes, Mahieash. So earlier the better. So the moment you notice any change in your parents' mental health or cognitive functions or behavior, don't wait. Please go and see a professional as soon as possible. So we have mental health clinics in almost all the main hospitals around the country, and we have consultant psychiatrists in most of these places. And in other places, we have trained medical officers. So you can visit those clinics and get a proper assessment done. And if you have any query or any question, you can always dial 1926, our National Mental Health Helpline, to obtain more information and advice. When it is urgent, as I said earlier, the better. But if you see a very sudden change in someone's behavior or mental state, they may be getting agitated all of a sudden, or maybe getting confused all of a sudden, that's a medical emergency. So you need to see a qualified doctor as soon as possible, because this instance, this situation can arise due to some problem happening within your body mainly.
Indeed, understood. All right, let's leave it at that. Really appreciate it, Doctor, for taking the time to explain all this. Consultant old age psychiatrist, Dr. Madhushani Dias. Thank you so much. Let's take a break now. This is the State of the Nation. Back with the state of our world. Well, Sri Lanka's economy can't be run on vibes. When the World Bank and the IMF says one story, the central bank says another, and the cyclone impact is still sitting in to be updated box, you and I are basically flying blind. Investors guess, businesses hesitate, and the public pays for the confusion. Then comes the money talk. $166 million from IFC sounds like oxygen for the SME sector, but only if it reaches the SMEs on the ground, not just the banks on paper. And while we argue over our numbers, the world is rewiring trade and power in real time. Deals are being signed, supply chains are shifting, and if we don't get our basics right, data, delivery, and value addition, we won't be players. We'll be spectators paying premium prices even for our own products. So tonight's message is simple. Publish the real baseline, track where the money goes, and build an economy that earns, not just announcements. Well, with that, it's time to wrap up this edition of State of the Nation. Thank you very much for watching. We'll be back again next week. Now, before that, send us your comments to feedback.adncenglish@derana.lk or WhatsApp us your feedback on 076 805 79 We'll be back again next week with more views you can trust and opinions you cannot ignore. Thank you for watching tonight. See you again. Bye.